Okay, great. Okay, I'll share my screen. And let keep this session interactive, friends, not as a monologue from my side. Please share your views and let's keep it as a more interactive session rather than just as a speech. Okay. So this is the chart of Nifty. So if you see on a weekly basis, so 18,500, 18,600, sorry, 18,600 is our all-time high level, and now we are around 18,117. So this is the level. If you see this trend line, this is basically the parabolic trend line. Uh, exactly, Nifty is touching to this line right now. If I go to, yeah, if you see this exact, one time it tried to break this parabolic trend line, but it is unsuccessful. Then there was a false breakout happened. And then again, last 2 days, it is trying to break out, and slightly, if you can see exactly, it is at the parabolic trend line. So if market need to move ahead in coming weeks or coming month, then first of all the price need to sustain about 18,200 above this parabolic. Yes sir, consistently day on day it should uh, trade above this line, and then slowly it will start moving up uh, to 18,600. And I think this is very much possible in this month to reach that 18,600, because the way the market, if you see the chart and the structure, it seems very much market is looking ahead to go and touch the all-time high of 18,600, and then start its next leg of journey. I think the last week, sorry, the weekend, I seen one message. I don't know how much that is true. I really didn't check the authentication of that message, but I think Netherlands in Europe is against the sanctions on Russia. So some things are moving on that front. So things seems positive. So this is how I see as a market right now. And if in this coming week it starts going up from this line, then I think 18,600 can be achievable in this coming week itself. It's not a big gap here. Just a 400 points, 500 points is nothing. In terms of Bank Nifty, same thing. 41,800 is the all-time high. First, once it tried to reach on 15th of September, but again it could not break it, and then the market came down almost from 41,800 to 37,500. So it was a good fall from here, and then again Bank Nifty restated the journey, and now it is just consolidating near the breakout. So definitely this is also a good structure. The Bank Nifty is just consolidating near the all-time high. So this is a very good technical consolidation. It should probably in the coming week it should break this all-time high line, trend line, and if it breaks, and then if Bank Nifty trades or sustains the above this 41,800, I think then Bank Nifty will also start its new leg of journey, and then it might reach 50,000 very soon within this year itself. Uh, I think that's the target of the whole market, to reach 50,000 within this year itself by end of December. So that's how I look at the market. Bank Nifty and Nifty for the coming week. In terms of sector-wise, PSU banks have ordinarily performed um, last I think couple of months. So in a month, it has given almost 17% return, and the kind of results they have shown, all the PSU banks, if you see, they have really shown a very strong numbers, especially if you see the SBI numbers which has come weekend. I think very strong numbers they have presented. And I think in PSU, SBI can be one of the stock which can be definitely considered for a long time. It's one of the India's largest bank, and backed by government. So I think SBI can one of the bank which can be considered as a long term for our core. Also, I think it should not be a problem. Second, in a month, if you can see, metals has suddenly shown a traction, and all the metal sector, if you see, last week also, it was almost 7.5% up. So PSU bank, metal, uh, oil and gas, and pharma, I think these are the four, and defense. These are the five sectors I think we need to focus very much. Sometimes in between, I think IT was a little bit showing strength, but then suddenly you see in US, even though Dow Jones was not falling so much, but Nasdaq was falling big way. So that's how somehow IT again. Still, I'm not really very bullish on. If you see monthly wise, it has just performed 3.5%, and on weekly it is just 1.32%. So I think we can consider top five: PSU, metal, oil and gas, pharma, and defense. I think these are the sectors which definitely we can keep it in focus, and look for the opportunities in this one. Auto, somehow I was seeing some movement, but suddenly, if you see, auto really didn't do anything in this week, because all the trigger points of their monthly sales of vehicles and all those things has been factored in the last week's movement. Last week, auto stocks did really very well, like Maruti, iShare, and all those stocks. Yeah. One more thing from let's see how we look like on a uh, option chain. I didn't use it long time. Let me see. Okay. Okay. So if you see on option chain also, currently we are at 18,117. And on a call side, if you see, everyone is on the long side, and put side, 18,000 is going to be a very strong support. uh, Almost like in last week, 78,400 contracts have been uh, shorted on put P side. So that means, uh, if even though the slightly market goes up and down, but it will not cross 18,000. It might go to 18,000, and then from there it will bounce back. So considering 18,000 as a strong support, I think next week should be good. And secondly, on Friday, US markets have really closed very strong, even though the Dow Jones as well as the Nasdaq. Yeah. So overall, I think market looks pretty bullish for the coming week, from data point, from the chart, technicals, and even the global cues also are pretty positive for the market to rally next week. So let's see how it goes overall. Yeah. Any thoughts, guys, on the on market, or anyone want to add anything from their side? As I was away for the entire week. So if anyone want to add anything specific to the market, anyone?
Market is Satish here.
Yeah, please.
Yeah, actually, I have one doubt. If you see the Opstra open interest, no,
Okay.
in that I see no 18,000 puts are very high. As you said, 18,000 puts are high comparatively call selling. But
Yeah.
after that, all the strikes are having calls rights are higher numbers.
Okay.
Comparatively, the puts are less, but the calls are high. Can you see that one and can you suggest your views?
See, basically, on the call side also, if you see premium prices, the price change is high. So basically, this on a call side also you can consider as a uh, bullish only. The reason is if you see on 18,000, there is not a short build up. There is a long build up. So even though even on the call side also, people feel the price for coming week will be above 18,000. If you see 18,000, almost 1 lakh 5,000 contracts, then 18,100 is 1 lakh 3,000 contracts, 700 3,722 contracts. So even on the call side also, people are in a long build up, so they are bullish. uh,
Okay, okay,
yeah, so if you see short build up is where 18,500. So here people are, because and here also if you see 96,000, so that number is definitely very high. So call side people are thinking that it will not go above 18,500. It will the weekly expiry for this coming week will be in between somewhere here, above 18,000, in between 18,500, can be anywhere here as per, this is Friday's data. So this data is dynamic. We don't know how this uh, dynamic data will change in the coming week. So based on that, we can make our view. But as per the current data, this is what looks like. And if you see after 18,000, from at a P side, there is nothing. 18,100, it is 84,000. That is slight, you can say. If price try to fall below 18,500, so this can act as one support, 18,100, and price might bounce back. So like currently it is 18,117. uh, so even the price falls, so it should come at 18,100, and from here reverse, or else if the price falls from here another 100 points, so here it's a strong support. And after that there is no support at all, 18,200, 18,300, there is no put writing. But on a call side, people seems are busy, bullish on this prices, 18,200 and 18,300 till 18,500. That's how I look at the option chain data. Yeah,
Same
anyone?
thing
Hi
is
Mantesh bhai.
same thing
Yeah,
showing
Aman
in
here. Yes.
sensible also.
it's the same data. It's a
Yeah,
it's a live data about what I've shown you. So you will see the same thing on Sensible or any Opstra or any platform. Yeah, yeah. Tell me, Aman bhai.
Yes, Aman bhai. So Aman here actually. Just want to add on that along with the sectors actually you have mentioned, even
Mm-hmm.
construction, real estate and cement actually. That is
Okay.
also looking very good actually, like AS or Phoenix or NHPC or JK Lakshmi Cement or Ambuja Cement, and also railway stock especially. So
Yeah. See,
very bullish.
I would like, yes, definitely I agree with you. But in real estate, I think cement definitely yes, because I have
Cement and
gone through.
construction like AS or Phoenix or maybe
Okay.
NHPC like that.
Okay. Okay.
Yeah, yeah,
Because
please add on. Please add.
because I was just going through some of the cement stocks,
Mhm.
um, which have performed last week, like Dalmia Bharat. If you can see, yesterday night only I was studying this Dalmia Bharat yesterday, because in last 2 days it has really given a good move, almost 10%, 11% move. So I was
Yes, yes.
studying it, why it is so much running. I really didn't find anything exciting. If you see its quarterly results,
Mm.
sales is down uh, previous quarter. Okay, the
Yes, yes.
Y on Y, okay, it is high. Operating margin, if you see, from previous quarter 18% to 13%, it's drastic fall. And from Y on Y perspective, it is 24 to 13. So margins have drastically come down.
Mhm.
Uh,
They have
PAT,
actually hiked the price, so market is kind of forward looking. So that may be the reason. That may be the reason that
yes.
some of the
So,
stocks
so,
are.
so what I feel, whatever the price hike, that was the trigger. So that will be like, very short time, like maybe the now already 2 3 days. If you see all the cement stocks, either it is
Mhm.
Dalmia Bharat or ACC or a couple of
Look for
more.
Ambuja Cement also. Its structure
Yeah.
is also looking good.
So yeah. So uh, very very short term, I am seeing. And
Yes,
the
for
trigger
short term
point is,
momentum only. Yes, yes.
yeah, and the trigger point is only one trigger point. That is that they are hiking the price.
Hmm. Right,
But
right.
on a fundamental side, uh, I'm not seeing anything
Yes, yes.
as a positive for them. So
In
that's
construction,
one of,
AS is looking very good actually. AS is good. Action construction.
yeah, it has already,
Yeah, just given the breakout on Friday actually.
yeah, yeah, nice breakout it has given. Yeah, so
Just result is due maybe. So that is the thing we need to watch.
yeah, but 9th November it is saying here, but I really don't trust these dates here,
Yes, yes. It is
trading view.
on 9th or 10th, I
No, it's
think.
always better to verify. It's always better to verify it in
Ah,
NSE website. These guys
Yes,
are
yes.
never trustworthy.
yeah, 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 yeah.
Never, never, never. I agree,
It's
Bhaskar.
really,
Yeah.
but on a daily, definitely it has given a
Hmm.
strong breakout with huge volumes. So
Yes.
ninth is on Wednesday. So
Yeah.
yeah,
Tuesday
you
is
can
also
look.
holiday.
Yeah, so you sorry, come again.
Tuesday is also holiday in NSE, na? So
Tuesday is holiday. What is it?
Guru Nanak
Guru Jayanti,
Jayanti.
I think. Yeah, Guru
Okay,
Nanak
okay, okay. Yeah, so okay, structure looks good. There was a rally and then there was a pullback, and the pullback exactly it has taken a nice support of the previous breakout level.
Jayanti. Yes.
This was the previous breakout level, and then it
Hmm.
retested the breakout. So,
Yes,
so,
yes.
so structure-wise looks very perfect.
Result is on 9th only, actually. I have checked on NSE. Yeah,
Okay,
it's
good
9th.
then. So, if you see structure-wise, this was a breakout on 2nd of September, and
Yeah.
then it came back to retest the breakout, and it consolidated, and now it has given a breakout. So, technically seems this stock might show a good moment uh, next week, because the retest also done, consolidation also done, everything is done. So from a technical point of view, it has finished everything. So it is just before the uh, result, this
Result, yeah,
moment.
yeah.
Yeah. So be watchful.
Yeah, that is the
Uh,
thing holding me actually.
yeah.
So I am out
So
of that. Yeah.
because just before the results moments are, it's very difficult to
Yeah,
trust them.
exactly.
It
Exactly.
might be, it just they pump at, and even though the results are not going to be good, so they will just pump it, and then on the result day there you will see a sudden, 10%, 15%, 20% big red
Exactly,
candle.
exactly,
We
exactly.
have seen so many stocks, uh, before result 2 days they were really doing good, and on the result
Mhm.
day 20% lower circuit.
Yeah, because it is easy to sell to the actually common investor by the institute
So
actually.
yeah, but
So
definitely this stock can be in a watch list, and
and in
it,
railway
it-
also RVNL you can check actually RVNL.
yeah, I seen, but that is, I think it's rallied too much now.
Yeah, it's already
Yeah, already
11% on
pulled back.
EMS.
Sorry.
So
It is already 11% from 10 EMA.
Yeah. So I would not. But I think in the railways, I really like IRCTC. IRCTC, anyways, I'm holding now.
Yeah.
But I think
IRCTC actually just need more volumes and they confirm breakout actually above 760, but structure is very good.
yeah.
Just need more volumes actually, and maybe above 760, 770, it can be confirmed on higher value. That is the only thing actually I am keeping a watch on this IRCTC.
Yeah. So it looks very good consolidation is going on. Seems good accumulation is going on at this level. If you see kind of volume candles and the kind of chart pattern, seems there is an accumulation going on. Probably I don't know when they have results, and definitely they will post a good results consistently quarter on quarter. If you see IRCTC, they are posting a very strong numbers. So there
Yeah.
I don't see really any challenge for any weak numbers, because now
Yeah.
pretty much
Result is on
all
14th
the
actually. 14th.
okay. So I think pretty much everything in terms of railways going on. There was no problem at all. Any stopping any railways or anything like that in the uh,
Yes, yes.
last
Guides has
quarter.
also given very good breakout and but already run up a lot actually. So that is the thing.
Yeah, so I think IRCTC one stock can be considered to start accumulating if someone is considering it for a long term perspective.
Yes, yes, yes. Okay. Thank you,
Yeah.
Andesha. Thank you.
Anyone else, guys? Anyone else?
Yes, Pankaj bhai. Hello.
Yeah, sorry.
Hello. Am I audible?
No, it's very disturbance.
Just
Background is uh,
No, Sandeep's mic was on. I was
okay.
asking, ahead of the results for A's, since I'm holding from 300 and I added some at 325, can we exit 50% ahead of the results, or what can we do? Because it can play either way. It can go up or it. So what would be the general strategy?
I really don't see anything structure on the chart to do or to action anything. But okay, if you are very much conscious about, so um, you can take some percentage of loss and put some GTT order or something, at certain percentage, or where you see uh, you might not be happy the price to go down from there. So just put a GTT order there. I do that one many a times, especially this result time, like 4 or 5% down. I will keep a GTT order in case if numbers are wrong, then sudden red candle comes. So at least I can able to sell, half a percent, half a quantities or something like that. So you can put a tight, uh, GTT order
Yeah.
as a SL rather than exiting now, because
Okay.
you never know it might go up also.
Yes. Yes. Okay.
okay. I have a question. Am I audible?
Yeah, Sandeep bhai, boliye.
Mankish bhai, basically, I want to know, like during this result sessions, how do we, take position on any stocks? Like, should we take or we should, let it go? Because Vishnu Chemical, I remember I had a position and the chart structure was so good. Even the results were great, but it gave back-to-back lower circuit, two back-to-back lower circuit. Though it pulled back on Friday, so how do you see it, and how do you suggest, or anyone who can guide, during the result session, how should we keep our position or make new position or not, like take new position on stocks which are looking really good on structure basis, and even if the results are good.
Yeah, so how I see as so like after results, if you are seeing the structure and taking positions, so then it's much more visible. Now the numbers are already declared. So if after that, if the stock is going up, so definitely it's a positive. So then I think there is no hassle of taking a position or increasing the position over there. But before just 1 day or 2 day before the results, uh, there I feel a bit risky. You never know before 2 days, even though the stock is showing upward movement, on the result day it might give a very big fall if the numbers are not so good. I have so many examples I have seen in this one. There is one stock, if you see, I'll show you. If you see on the Gland Pharma here,
Mhm.
if you see the structure from here, it fallen, and then from here it started moving up slowly, and then if somebody would have taken up looking at this structure, that the stock is every day slightly inching up, stating that probably here there were on this day I think there was a result that stock might give upward movement, but and then on that day it was 20% uh, low, this stock. So usually I don't take positions if the results are maybe next day or after 2 days, or if even though if I take it, that quantities will be very low, and I will put a SL in the as a GTT, even though if it reverses from there, so it should hit my GTT order SL. That's what I do. If somebody is doing any other strategy, please go ahead and share with Sadhu.
I actually like to be away, let's say 2 days before and at least 1 to 2 days after result.
Yeah.
If you are holding much before that and you have margin of, let's say, 10 to 15% at least, then in that case, actually, you can have your trailing stop loss
Yeah.
around maybe
Perfect.
your buy price or something. But
Yeah.
try to book if you are in profit at least 2 days before result. And then when the initial euphoria actually fizzled out in 1 or 2 days, then you can again check the charts and your fundamentals or techno funda things, and then accordingly can take the position. So this is the criteria I am actually following now.
Yeah. See, basically, it's all about uh, what was your strategy when you were taken that
Exactly.
stock. If it is a long
Mhm.
term, then you should
This is
not
for
be worrying.
this is purely for short-term trading only. I
Yeah.
mentioned.
So
Yes, yes.
if it is for the core, then you don't need to be looking at
No, no, no.
every
Yes, yes.
quarter result and worrying about
No,
it. So that's a whole
exactly.
different story. But as we are playing swing and momentum,
Right.
Right.
so in such scenarios you need to be cautious, because try to safeguard your profits as much as possible. And exactly what Aman said, more or less, I follow the same thing.
Okay. Thank you, Tony.
Yeah. Yes, Pankaj ji, you wanted to share something?
Yeah, am I audible?
Yes, yes, yes.
Yeah, Mantesh. Actually, I just wanted to have a look at the PSU banks, some of those in monthly chart,
Mm-hmm.
because I feel they all are following a downward trend line from 2010, and
Okay.
if that trend line is broken out, that might be a big upside move for those banks. So,
Mm-hmm.
can you open a chart or something like Indian Bank or Bank of Maharashtra or something on a monthly basis? Yeah, if you see that chart from 2018 or onwards, if you uh,
Yeah. Here
yeah,
it made 17 December. It made the high.
yes,
Yeah.
and then this huge
Yeah,
fall.
I agree with you. Actually, all the PSU banks are in a very strong bullish, because I think their entire financial books are really getting more and more cleaner now, I suppose. and more stronger. That's what is
Actually,
reflecting their stock price.
Actually, I work in a PSU, so I'm a little bit worried about the working of those babus and all those
Yeah,
things.
yeah, 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 yeah.
Yeah. So it happened in 2017 also. That is why they were so bullish on in 2017, and all those banks uh, ran like anything. But then
Mm-hmm.
nothing happened. Some of those were consolidated, some merged, and then all other banks started sliding down again.
Mm.
So
So I think what I would suggest, if really you want to play PSU banks, so I think stick to some strong bigger banks, like SBI, Canara Bank,
yeah, yes,
and
yes,
maybe
yes.
Bank of Baroda.
Okay.
These are having a very large
Again, yeah,
book
bank.
size.
If you open the bank chart of Bank of Baroda, again it is showing a trend line, downward trend line on monthly basis. I think that is from 2010. Yeah,
Yeah,
2014 onwards. It is showing a
yeah,
very nice, yeah, this trend line. 2014 onwards, just very clean slide
yeah.
towards this, and it is just on the verge of breakout. If it breaks out, then it is fine, but if
Mm.
it may fizzle out also, that is my worry.
Yeah. So if you
But
overall, if you see, all the PSUs were down and now coming up, but except this
yes,
SBI.
exactly, exactly.
SBI
So
didn't
it's better
really
to take a call
fall
in
down.
SBI only.
Yeah. So if you see, uh, it was in a consolidation and then it gave a breakout, and then since
Exactly.
then it is going up.
Yeah.
And this one again looks a good structure, Canada,
Yes.
one of the stock. But again, I would say for a long term or so, I would not really, very much confident about these banks except the SBI.
Okay. Thank you.
Okay. Yeah. Pushpender ji, you wanted to share something?
Just a minute. Yeah, yeah, I can. I am following one strategy for stop loss, and I have lately started following BCP pattern, where the stop loss is not very far. And what I do is I determine that how much loss in terms of absolute rupees I'll be readily taking it. So I divide that amount with the
Sorry, Pushpender ji, in between
yeah.
your voice was not audible.
Okay. Is it okay now?
Yeah, yeah, now it's okay.
Mhm. So I'll just share my screen, and on that screen I shall explain it what I'm doing.
Yeah, yeah, I'll stop. Okay.
Uh, is it visible now?
Not yet.
Just a minute. Now, are you
No,
seeing it?
no, 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 not yet.
Sorry. Is it?
Yeah, it's coming.
Uh,
Yeah.
what I'm doing is that I try to find such kind of low cheat areas. Of that video in which we explained it. So what I do is, like, suppose if I am taking entry here at 558,
Okay.
and the, for me the stop loss would be the low of this,
Yeah.
right? So say if I want that I don't want to bear more than 1,000 rupees stop loss.
Okay.
1,000, sorry, 1,000 rupees loss. In that case, what I would do is I will uh, divide that 1,000 with the difference of these two.
Okay.
So I will buy only those many shares.
Okay. So basically,
So
position sizing you are talking about.
yeah. It is about the positions and sizing. And in this case, so I'm able to define that how many shares I need to buy in a particular case. And if it
Okay.
moves up, then it's okay. Then I'll keep telling the stop loss. This is one thing which I'm following.
Yeah, yeah, yeah. Good. No, this is what, if you remember, I think a few weeks back, I had a detailed discussion about this position sizing.
Mhm.
So that is very, very important in terms of
Yes, yes,
maintaining your losses.
yes. So I'm
Yeah.
not worried that, and I am also following that strategy, cancellation strategy, which was presented by Gaurav
Okay.
and in the circle mastermind, and I'm following. I'm finding it very good, and in all those the setups which he showed, there is already about 20 to 30% move in the stock before that setup is formed. So in that
Okay.
case, if and he screens the stocks on the basis of the fundamentals, and, makes a very small universe. So on the basis of which takes entries, and in such cases, the probability of hitting the stop loss is very low because that stock is already in the movement, and after making a base again, it is trying to make move upwards. So that
Okay.
is also helping me to take low cheat entry. So
Okay.
like in ACE, I took this low cheat entry in this case. So I took entry somewhere here
Okay. Okay.
because there was already a move. There was already this move, and then no, sorry, I took entry here,
Okay.
and then there was this consolidation. So this was my pivot point. I took some entry here, and on Friday also I added some. So
Okay.
this is what
Okay.
I am doing.
Good. 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 Yeah. And I think first time, Madhu, why you have joined our meeting? Please share your thought process. Everyone would like to hear you. Madhu, are you there? Okay, I think he's on mute. Okay, so now straight away we'll go to Bhaskar ji and hear him about his method and see how we can implement with our strategies. Yes, Pushpinder ji, you want to say
Uh,
something?
yeah, one small thing which I'm doing is that I put an alert on my stop loss. So if the price goes below that, it gives me an alarm.
Yeah,
So I'm
yeah,
not worried about that. So
correct, correct.
that way it is helping me. Thank you.
Yeah. Okay, Bhaskar ji, it's all yours. You can share your screen and start the presentation.
Yeah, thanks, Mantesh, and good afternoon, everyone. Let me present my screen. You are able to see my screen, the presentation.
It's coming up. Yes, it is there. Yeah.
Okay, so I'll go into the presentation mode. So because I am in a presentation mode, I will not be able to see any questions or anything like that. So in case if
No
somebody
problem.
has any question, they can interrupt and they can ask. So I'll
Yeah.
quickly run through the slides. I just thought while talking about the idea, I will also share some of my personal experiences of how my journey with this approach has been. So we can then discuss on the basis of it. So essentially, this is a strategy where I wanted to explore how best we can look at investing in growth stocks and capitalizing the momentum which is prevalent in any stock. So in the growth stocks, right? So as a strategy, this is purely a momentum based investing in a good quality growth stocks. And the tools and the system that I wanted to use was essentially a trend following system where we are investing on a good quality stocks with a strong momentum in it. And so for that, what I have used is the blue dot list that MarketSmith puts up. And initially, last year, I was using that in isolation. And I will talk more in terms of my experience last year versus what I'm doing now. And subsequently, I have now kind of like merged it with combining it with rather with the trend template that MarketSmith provides. And as we go along, I will explain why I did that. And before we go into it, what is this blue dot list? Like general tendency will be for us, for momentum traders and for breakout traders, is to look out for a stock which is making a 52-week high. Now, very similar to that, MarketSmith India provides a facility where when a stock's relative strength hits a 52-week high, it gives a blue dot on that stock. Now, the interest is on stocks where it is probably forming a base or it is just coming out of a base. And that at the same time, when the relative strength for that stock is hitting a 52-week high, then MarketSmith provides a blue dot. So for me, this was a clear method to identify stocks which are outperforming the market, which is having a stronger relative strength. That a stock is either coming out of a base or it is forming a base, the right side of the base, and at the same time, it's also outperforming the larger market. So I started to focus on such stocks, and then I wanted to see how do I capitalize the momentum building up in those stocks for growth investing. And subsequently, I have merged it with the trend template of Mark Minervini's trend template. Both they have two flavors of it. One is 1 month and the other is 5 months. So I am merging the data from both of these templates, and then I am combining it with the blue dot list and stocks that filters from that universe becomes my target group stocks. So then I keep looking at opportunity where I can take a trade on those stocks and I can do it. So moving on. So the system essentially aims to invest in stock that filters through the both the criteria, right? The trend template as well as the blue dot list. The trend template ensures the stocks are already in what Stan Winston will call as a clear stage 2 uptrend. And the blue dot list essentially gives me a confirmation that these are stocks which are outperforming the larger market. So I make the combination of these two so that I know I'm getting into a stock which is already in an established uptrend. And at the same time, the stock is also outperforming the larger market. And so because I'm looking at a trend following system, I primarily look for charts on the weekly basis where I need to be able to see a clear uptrend in existence before I venture out taking a trade. So I'm typically not looking at the reversals, the bottom reversals, right? I'm not looking at that for an entry. I want the stock to show me that it is in an established uptrend, and then only I'm going to look into an entry in that stock. The other thing is because it's a trend following system and we are looking at momentum investing in it, my holding period spans anywhere from a couple of weeks to sometimes even months, like 6 months or 8 months or that. However, if my stop loss is hit at that same moment, I'm out. It doesn't matter how long I have been on the trade. If the stop loss is hit, I'm straight away out. The filters to ensure I get good quality stocks and I'm not going to take in any stock and every stock that shows up on the momentum. I filter stocks off the master score A and B. And this essentially ensures that I have certain basic level hygiene check done on the stocks. And then I'm entering into the trade in it. And I also additionally put in a price strength of 80 and above. And why 80? This ensures the stock has established outperformance over the period of 12 months. Right, the primary score of price strength on MarketSmith essentially focuses on 1 year relative strength. So if a stock has a 80 of price strength, it essentially means the stock has been consistently outperforming the market. So that gives me an additional layer of safety that I am not getting into a stock which is having a pump and a dump kind of scenario. So these are the minimum conditions I apply, right? Like now, time and again, I keep fiddling with these criterias and I keep trying other criterias to ensure my safety net is more robust. But then it's entirely up to us as an individual what level of risk appetite we have and how we want to play around with it. One of the other condition I look for is the promoter ownership. I want to ensure at a bare minimum the promoter ownership is 50%. However, I don't want to get into a stock where the promoter ownership is greater than 80%. If it's greater than 80%, the retail holding will be very less. So then my entry and exit is always a question. And if the promoter holding is less than 50%, I really don't trust that management to put in a lot of focus in making sure the stock shows a good momentum running it. I also combine a bit of the free float, which is essentially the percentage of the stock which is available for trading, and then look at what percentage of that free float is available as a volume, right? Like I need a sizable volume to show up on the screen so that I will use that as an input for my position sizing. If the volume is going to be low, I will not go very high in terms of my position sizing, because then my entry and exit is always going to be a challenge. I don't want to do that. So I want to stay under the radar, not trade a very big position when compared to the volume that is happening in it. Now, typically on these stocks, what I've observed is when they break out and when they are in a very strong upside move, you are not going to be able to see a lot of period when it is going to form a consolidation or even a minor pullback. So you just have to figure out what is your least risk entry levels and then jump in. So I generally look for a 80 MA, and if I see the price anywhere close to 80 MA, I try to plot a stop loss just below 80 MA. And if that threshold is acceptable risk for me to take, I jump into the trade. So which is contrary to the general trend, even general advice that you will get from MarketSmith saying that you should not buy above 5% of the buy pivot point. Now in these stocks, if you get it, nothing like it. But I'm not going to just sit on the fence and keep waiting for that base to form and then get a entry level at the pivot of that base, because most of the time you will just be sitting on the fence and watching the stock running away from you. So I try to take a ATMA as a indicator, and if whenever the stock is reasonably closer to the ATMA, I will just put a stop loss below the ATMA and jump in. Let that profit build up, and once I have a reasonable cushion with the profit, I use a part of the profit to fund my next entry, and again I'll keep repeating this cycle so that I build a bigger position. However, my risk is always limited, and I will be very, very particular in not risking my capital. I am willing to put additional profit earned for financing my subsequent risk, but I never want to risk my fundamental principle that I have put in it. So that's my larger approach. I'll quickly run through few of the slides to talk about what was my experience in there and how I kept refining my system and refining my approach as I go along. So maybe that gives you a better clarity of what I'm talking about. So this was the first, or rather one of the first stock that I came across when I first started looking at this RS Blue Dot list. So when I took the subscription to MarketSmith last year, I was fiddling around with all these screens and I was trying to figure out what is that I can capitalize on to get the best out of my subscription. And this was one of the stock which I saw in RS Blue Dot list. It was hitting consistently again and again and again and again. And this was an IPO stock and SME stock, so it was not available. You can't buy one stock, two stock, and all that. You have to buy it a lot. And I said, okay, let it pull down, let it do a consolidation. I will enter. And actually, I never got the entry. And even the minor pullback it had, because of the lot size and the capital that it required, I was very paranoid. I never took a trade. But then the growth that this stock had and the kind of the rally that this stock had got me really interested to say that, okay, there is something that I need to learn, and maybe I'm missing e-key, but I don't want to miss the future e-keys of what is coming up in the RS Blue Dot list. So this was one of the stock which essentially got me very, very interested in the system. And one grudge that I hold with MarketSmith is that compared to the other screens, for RS Blue Dot, they don't let you put in your filters, and you can't apply any of the filters, and you can't extract the data the way how you want it. And they don't even show you the charts for you to flip through and then come back and decide which one you want to add and all that. So I simply have to pull it down into an Excel sheet, take it to my trading view, and then keep looking at the chart. And if I find a chart, I have to come back to MarketSmith and then pick up that chart. So it was too much of a hard work. I mean, more than too much of a hard work, it was too much of an irritant, and I didn't really like it. But stock like this kept attracting me back to the Blue Dot list, and I kept looking at for it. And then came this chart, Expro India. And when I initially saw this chart, it was repeatedly hitting 5% upper circuit, and it was appearing on the RS Blue Dot list. Compared to e-key, this was not this one. This was not a SME stock, so I could take a smaller position as well. And I started to read about the company, went through their investor presentation, and spent some time in understanding their business, what is changing in their business. And then that hit me, right? Like, no, that got me very much interested. This was a stock from the Birla Group, not much spoken about in the Twitter, not much spoken about in the social media, but then the stock was consistently hitting upper circuit. And I noticed the preceding few quarters, they were consistently showing a phenomenal rise in their EPS and in their profitability. So when I went in digging more, I realized they have been clearing off a lot of their debt. So when the debt got closed, all of that money pulled in into their profitability, and that is what is causing that huge spike. So decided I'm going to take a plunge and put just 1% of my capital and bought shares at around 120 rupees. And I was holding on to my nerve because it was hitting 5% upper circuit back to back to back. And when it came around 600 rupees in a span of a month or two, I thought this is too much. And I was never used to getting this kind of a growth in such a short span of time. Maybe it took 3 months, I don't know. I booked 1/3. I initially thought I will book out entirely, but then I decided I'm going to let the whole stage 2 uptrend run, and I'm going to capitalize on it. And I booked out 1/3, took some part of it, because that 1/3, if I'm not wrong, it more or less got my capital out. And that is what I was trying to do. Took out my capital, let the rest of the thing run, and I just kept tracking of it. Now, this price chart is adjusted for their bonus that they gave sometime this year, early this year. So you cannot really plot it at the price at which I entered, but I'm just sharing with you the numbers from my memory, right? Like, my entry was around 120. I booked out 1/3 around 600 rupees, and it went up to 1400, 1600 somewhere levels. And I was very happy. I could stay on patiently in the stock for the full rally. And then it started to consolidate what it appeared to me like a stage 3. So I had plotted a low of the stage 3, very similar to what Pushpendra ji was just talking about. I had plotted the low of one of the weak price level. And whenever it came and hit that level, I was out. So I think I got out somewhere around 1400, 1500 odd price. And I didn't wait for their bonus issue because I was really not keen how long this stage 2 rally is going to continue. So I was more keen to book my profit out, and I got out of it. On the hindsight, it was a really a stupid mistake that I had just put in 1% of my overall capital as allocation into this. I did not position size with the risk. I position sized it with the capital. So that one difference I had it in this. Generally, people will say you shouldn't risk more than 1% of your overall capital in it. Right? But here my allocation itself was 1%. So I was okay to let go of the whole allocation if it is going to go the other way around. But now on a hindsight, I think when it showed a good momentum and when I was in a good profit, I could have plowed back a part of my profit and built up a larger position size in it. But somehow the way how the stock was running on, I couldn't muster the courage to do it because this was my first momentum investing on a growth stock with RS Blue Dot list. So I had not developed that confidence and the conviction that this is something that I can do. And as it always happens, right? Like when you have a trade which gives you the best of the profit, you get carried away by the ride. So the 1/3 profit I got in this stock, I put in this stock, Anand Rayons, and this looked like a very no-brainer kind of a stock, right? Like it had a good stage one, and then it broke out into stage two. And I don't think I entered when it was just breaking out of the stage two. I entered much later, and I had put that 1/3 of the profit. The profit that I got from that 1/3 sale, I had put it over here. And I said, okay, I'm going to let this stock run through the whole stage two rally, and I'm just going to sit through it. And 1 month later or 3 months later, I'm going to become a multi-billionaire and I'll buy a Porsche and whatnot. Right? And it was really a stupid of me on a hindsight. It was really a stupid of me not to have taken notice of the topping pattern that it formed. That just as much as it was rallying up, it started to have a fall. And it was a 5% lower circuit, 5% lower circuit, 5% lower circuit. And it would be at the lower circuit at the open, right? Like, there were times when I used to put the sell order the previous day evening, and I used to put the sell order the next day morning, 9 o'clock. Because even before market opens at 9 o'clock, you can put in your sell order. And I will straight away calculate the minus 5% and I will put my order, and it will remain there unfulfilled. And end of the day, the order will get rejected, saying that this order was never rejected, never executed, right? Like, no. So I was actually laughing at myself for the stupidity that I did, that I failed to look at the top. But because it was also an experiment, I was doing it with the profit, it didn't really hurt me much. But the persistence of putting the order at 9 a.m. helped me finally get out when I had a 40% drawdown from the invested capital. So don't hold me that I didn't respect my stop losses and all that. The system just didn't allow me to do it. With a 40% haircut on my invested capital, finally I was out of it. And then I said, like, I'm not going to do this stupidity. I need a more robust and a more sustainable thing to do. And that's when I said, I'm going to now marry this data with a trend template. And then only when there is an established trend and when the trend is sustainable, I'm going to get in. I'm not going to jump in just because a stock shows a big upside move in one freak week or so, right? So this was a very poor executed trade because I didn't notice the top, and I was under the impression that while the accumulation stage takes a much longer time to form compared to the stage 2 uptrend, I was expecting that a stage 3 also may have certain amount of time when it gets distributed, Wyckoff method, right? But unfortunately, it need not be the case. The stage 3 can overlap with towards the later part of your stage 2 and the early part of your stage 4 as well. So that's a learning that I had in this. And another thing was when I got out of this somewhere, I think around the same time, these guys, Market Smith had announced the market is in a downtrend. So I said, I'm not going to experiment with more of my capital when the market is in a downtrend. So from around November, December last year until June this year, I was absolutely not on any trade. I was holding my growth investment part of my portfolio 100% in cash. And actually, I was also in cash in my swing trade account, because what I do is I try to take swing trades every now and then and use that as my barometer to measure the strength of the market or the pulse of the market and how I feel the market. I will try to apply it in my growth investing, because my growth investing capital is much bigger than my trading capital. So I can afford to blow off my trade capital, but I can't afford to let my growth investing capital get blown off. So I use my trading account where I do the swing trades to get a pulse of how the market is moving. So when it didn't show me a good momentum in my growth investing account, when more trades were failing, I stopped completely any of my investment in the growth account. So from around December last year until around June, July, I had not taken any trade. I was 100% cash. It was a very tough period. Trust me, as much as they say you have to be in cash when the market is not right, it's a real test of your discipline and real test of your perseverance. I had to do, because I just came out of a very horrible experience with this stock, and I said preserving my capital is more important than any adventure to multiply my capital. I don't know if it was a good decision. I know a lot of guys took trades and they were making money when I was sitting on the fence. But I said, like, I'm not as smart as they are, that I can make money even in this market, and let me be who I am, and I will stay back and I will get in when I have the comfort. End of June, I took a couple of swing trades. All of them I was out with my stop loss hit. The position sizing was very, very small. So I was quite okay to lose that much of the capital. Then for most part of July, I didn't take any trade. End of July, I took few swing trades. It worked. So I was happy. August month was fairly good. So I was happy. I think I started to invest only around later part of the August, after Independence Day is when I started to take some of the swing trades. It worked, but it wasn't anything great. I think I ended the month in a break-even mode. And September was good. So I again started picking up some of the trades in the momentum investing. And that is when I got into this trade, Gensol Engineering. This is a company which is coming up with EV vehicle. Again, you won't find this name very commonly on the Twitter. You won't see many people talking about this stock. So I took the trade. It will be very scary for anybody who would have taken the trade I mean, if you had seen the chart when I took the trade, because it was pretty much 70 or 60% angle, 60-degree angle of the upside move, right? But I just followed the strategy that what I was having it previously, so it didn't really bother me much. Entered when I got a reasonably close entry point to the EMA, and then with little bit of the stop loss, I jumped into it. Now, one big difference is Xpro is not an SMA stock, but Gensol is an SMA stock, which means one lot you have to buy means you are buying 532 shares. And when I entered, it was somewhere around 900 rupees. But that didn't really bother me much, because from the time I entered, the stock kept hitting upper circuit after upper circuit, and in a very short span of time, I was above the break even. And even before I could realize, I was around 30-40% profit. So I took the risk, added one more lot. And I mean, of course, the 900 is my average price. So I added one more lot. But this time I was clear that if I am seeing a sign of a topping, and if I see the stock consolidating sideways, I'm not going to wait for a long time. I'm just going to get out. So I had plotted 80 MA and I had plotted 23.6 Fibonacci retracement. These are the two indicators for me when I should exit. And whichever of these hits the first, I'm out of the trade. So Gensol was a good trade. In a very short span of time, I moved on. I rode the rally from around 900 odd average price to around 1900 odd. It was a very, very short span of time trade. I wasn't in it for a long time and I was out. I booked my profit. I got out of the trade. For my second lot, I didn't make much of a profit. I think I got out of it more or less on a break-even level. But the first lot gave me a lot of the profits in it. So then at the same time, I entered into this other stock, knowledge, marine engineering. You will notice consistent pattern in this is in all of these stocks. You would never see these names coming up repeatedly in social media. You wouldn't say any of the social media gurus talking about these stocks, and you will not see these names getting promoted very widely, right? And that gives me a lot of jittery feeling that I'm getting into a stock which is not spoken about. But it's also an indicator that once a stock has reached its peak is when people will actually start to talk about the stock. So I trust on the system, I trust on the momentum investing and the stage 2 learning that I got from Stan Winston. I'll be grateful for those learnings. So I entered this stock and I'm still holding this stock because I have built up a sufficient profit margin. So my stop loss is still quite deep. I am very upbeat on the business that these guys are doing. It's running really well and they have a very healthy ROE. The company is doing really well. It went into a consolidation. I was in two minds, should I exit or not? And now it's again showing a positive momentum. So I've added one more lot just very recently last week. And with that third lot added, I'm still sitting with a comfortable profit margin. So that's the advantage with these SME stocks, which are having a good momentum, that if you catch them at the right time and you enter it, you will build a sufficient profit margin that you will not fear a minor movement of couple of days of lower circuits. You will still be comfortably placed. But you must have the conviction and you must have the knowledge on the company so that you are willing to take such a risk, right? More than the knowledge of the company, you should have the conviction in the method that you are following. So I'm still on this. If it's not going to take the previous high, which it had made recently, I may consider trimming down my positions. But otherwise, I'm quite upbeat on this stock. And if you notice in all of this, at the time of my entry, they would have met all of my criteria, the master score criteria, the relative strength criteria. The stock would have met. They would have had consistent quarterly results giving profitability. I generally do not like to enter a stock which has had one or two quarters, recent quarters, negative balance, negative results, EPS, unless the subsequent quarters have turned positive, right? So I look for a consistently profitable EPS by quarter and by annual earnings. These SME stocks do not report you quarterly results. So you get their numbers only once a year. So that makes it a little bit more tricky to figure it out. But I still look for annual annual EPS to be positive. If it's not, then I don't really like to stay on in that stock. Samrat Pharma.
Bhaskarji, one thing, in fact, two things. After these examples, are you going to talk about the method? So how you use that method?
Yeah, I can talk. It's not part of the slide, but I can very well quickly run through the method. But it's fairly simple. I'm not doing any rocket science, but I can talk about it.
No, Bhaskar, basically what we wanted to see, if you can show us a live example, we can just open the market smith and we can see how do you select it.
I'll quickly run through it. I'll open the market smith and I can quickly show you what I'm doing and the whole thing, right? And don't hold me if it is not a very sophisticated way of doing it, right? Like, no, with my limited Excel knowledge, I'm doing it the way how I can do it.
No, it's okay. You are doing great actually. So, yeah.
Sure. We'll talk about it.
Yeah.
We'll talk
So
about
basically, you show as a practical thing how you do or how you apply this method on a MSI.
I will show you what I do. I will show you what I do on a daily basis, and if further questions are there, we can always talk about it. Yeah.
Okay. And on chart, you can log into your MSI and share the screen and show any one of the chart. You know how you see that where is that blue dot, and that will I think help the group.
See, these are chart from MSI. But yeah, we can do that. We can pick up any of these stocks and we can go and look at the MSI charts. That should not be an issue. We can do that. Yeah.
Okay.
So this is one stock I am putting up here, and I am still holding a trade, though it has pulled back reasonably more than what I would have liked. For the simple fact that this stock, when I entered, it had the core 33 attribute. Now, those of you who have gone through Mark Minervini's books, you will recollect that he talks about this core 33 attribute in a stock, which essentially means 3 quarters of consecutive EPS growth and sales growth and margins growth if a stock has got, where the growth is also growing, then that's called a code 33 attribute. And if a stock has a code 33 attribute, then you should not miss such opportunities. So I saw this stock, I liked it. It had the code 33 attribute, and I entered the stock in the month of September when it was giving that huge upside move. I got it pretty low in terms of the price move, so I am still running with a reasonably a profitable position. This is not an SME stock, so I have that advantage. I can scale in and scale out as I wanted. And because it has kind of like retested the 38.2 Fibonacci level, I am 50% down in my position in this. The result is due on November 14th, and depending on how they're going to perform, I may sell off the remaining 50%, or I may add back the 50% that I took it away. So that's Samrat Pharma. If anyone is interested, you can keep it in your watch list. This stock had code 33 attribute. If it's going to sustain it, can be a very good stock to add in. The last stock is, this is something that I have recently taken an entry. So this is a stock where I am holding an entry, and I have taken an entry pretty recently. SME stock, a lot size of 200, but everything else remains the same, right? It comes in the trend template. It comes in the RS Blue Dot list. So you can easily pick up the stock and you can look at it. It's kind of like giving a very good move right now. I'm happy with the position that I currently have. I have 2 lots in this stock right now. So when I'm talking about the lots, you will realize that these are SME stocks. So the lot sizes are big, which means there is a considerable amount of capital that you will have to put into these stocks. But when I say I'm having 2 lots or 3 lots, while the position size I have grown up, I still focus more in terms of the risk and say how low is my risk, because I may have a position like, for example, KMU, right? The Knowledge Marine current position size is somewhere around 15-16% of my overall account, but my risk is actually negative. I'm still with a comfortable profit margin sitting over there. So even if I exit today, I'm not going to risk any capital. Even if the stock is going to go against me by 5-10%, I would still be comfortably in profit position. So generally people say that no, unless you build a big position size, you can't make big money, which is absolutely true. Expro taught me that experience. But building a big position at the same time exposing a bigger risk is not a wise decision to do, because if it goes against you, you will feel it terribly. It'll be a terrible mistake that you will find it too difficult to get over it. So build a position size and grow your position size aggressively while you have a profit margin to cover you up. And though that way your capital is protected, but then you're holding a sizable position with the stock, so that you are not going to have a problem in terms of not capitalizing on the rally that the stock has given. So I thought I'll summarize all of this and put in one lesson learned experience of this whole thing, right? So as I was just talking about, proper position sizing is vital to capitalize on the stage 2 rally that you're going to be on. Because even if the stock makes a 100% growth, in my case, it was 800 or 900% growth in Xpro over a span of around 8-9 months. But my allocation was just bloody 1% of my overall capital. And I never scaled in. So it was a learning. And stocks, you need to be very, very conscious of the stage of the stock, what stage it is in, whether it is stage 1 or stage 2 or stage 3 or stage 4. you must be able to quickly recognize it, because if you're going to get carried away by the rally that the stock is showing, and even before you realize it, you come to terms with the reality of what stage the stock is in. If it is in the stage 4, you are not going to get most of what you have built into the stock. So you need to be really quick in doing it. Now, I didn't want to put in every chart of every trade that I took, but of course, there are certain trades which didn't work. On the other group that I'm part of, the bullish momentum, I have been talking about some of these stocks, right? Like, so the guys from there will know that I was holding some of these stocks, but it didn't really give me much of a move that I wanted in those stocks. So I exited with either with a marginal loss or even at a break-even level. KPA Green was one such stock. Madhya Pradesh Agro was one stock where I had a lot of hope because it was forming a nice consolidation pattern, and I was really wanting it to go up, but it didn't move when I wanted it to move. It was taking way too long, so I just got shaken out. After I got out of it, the stock gave a good move on the upside. I just didn't care. I didn't chase it. I just left it there. And the point I was mentioning before we came into this talk, as you size up your position, make sure that your risk is still manageable. At the peak in Gensol, I was holding around 14% of the account. Capital was in that one stock, SME stock. So if it moves down by 5%, the impact is pretty severe because my account size is, the position size is around 14% of my account, but then still the risk was much less. I don't think it was less than 1%, but I think it was somewhere around 1% is what I remember. And one of the learning I had from Xpro was after it hit the stage 3, and while it was consolidating in stage 3, I decided to wait. I wanted to see if it is at any stage going to break out of the stage 3 and move into another stage 2 rally. You may choose to do it, you may choose not to do it. I didn't do it in Gensol, but I did it in KMU because the profit margin I had in KMU was much bigger. In Gensol, I had added my second lot more or less around the time when it was about to hit the stage 3. So I was a little bit nervous. So when my second lot, the price came back to my cost price of the second lot, I almost immediately exited. But that's not the case with KMU, so I'm holding it a little wider and I'm still on that stock, and now it's showing signs of moving out. One of the other important thing is, based on all the stocks that I've observed, if you see corporate action, bonus, stock splits, whatever it is, it's going to increase the volume of the stock available in the market, which means the probability of the stock maintaining that momentum is falling drastically. So these days, I don't prefer to ride on these stocks and get the bonus because I'm not looking at long-term investing in these stocks. I'm looking at momentum investing on the growth stock while it is growing. So I simply exit the stocks. And EKI was a very good example. I stopped tracking that stock after they declared a bonus, and when I noticed the price is now consolidating. And since then, once a month or once in 2 months, it's like, you go back to your school crushes Facebook and check out what they are doing. It's like that. I just go back to the stock chart and see, but it is not doing anything extraordinarily good that I'll feel the regret of not being on the stock. But if there is any of these actions, it's better to not get into that stock and just let it be there, right? Size up and trade the stock when the market is in the bull run. So play this game when the market, when the wind in the market is on your direction. So you are going to get benefited by that. If the market is in downtrend and all that, it's not worthwhile taking such a risk, putting a big size of an allocation of your capital into this and see what it means to you. So end of it, I just wanted to clarify that I don't want to paint a very rosy picture. I want to say that while as much as it sounds very fancy, I have also taken care of my risk management very, very seriously in it. It's not that the entire portion of my investment account is in this. Now, over a period, I have moved a sizable percentage of my investment account into this growth investing bucket. But I still have some long-term compounder stocks in my long-term investment account, which I am not touching it, and I will not touch it. I will let it be there, and I just want to keep them as a safety buffer. while I have this smaller growth investing capital, which I want to aggressively compound and thereby give my overall investment account a good compounder in it. So that's with the slide. And as we were talking about, I'll quickly go to MarketSmith site. Tell me if you're able to see my MarketSmith site. I will quickly go in to show what I do and how I do it. Okay, I take the
Yeah, we can see.
if you are on the MarketSmith site and if you're evaluating any of the stocks, you will notice this. This is that RS blue dot. I always want to make sure that the stock where I'm investing for the growth investing, I want to see this, as well as I want to see the trend template. The stock has to be part of the trend template. These two are most important criteria in it. And by the way, nickel adhesive is a stock that I am one of the other stock that I have recently taken an entry. I didn't talk about it. This stock had a fantastic rally and then it went into a consolidation. Now, one deviation or one rule break that I will talk about here, this stock recently gave a stock split. While I said, like, if you're holding a position, exit if there is a corporate action like a stock split or something like that. Nickel adhesives had given a stock split recently. The stock is now given a new 52-week high. So when it gave that new 52-week high, I have taken an entry. I'll hold and see whether it is sustaining or not. If it's not sustaining, I will exit. So that's the reason why I didn't talk about this stock. But I'm holding a trade in this stock right now. So you go to the idea list, and in the idea list, you will see something called MarketSmith stock screens. So you select it, and this blue dot list is the first one that you will see. So when you go there, and this is where I hate MarketSmith India, they don't give you any option to apply a filter here and select, nor do they give you a choice to see what are the data that you want to extract. So you can export this data, and what you will get to see is an Excel sheet that's opening up. I already have it open. Okay, let me rather close it. Sorry, I don't know if I screwed up that. So this is what you get, right? It only shows you the three key attributes, the 3 or 4 key attributes that you see on a MarketSmith site. So I download it and I just open it up, the filter here, and select stocks which are A and B only, and the RS rating as 80 and above. Because I do it on a daily basis, okay? Because I do it on a daily basis, what I do is, so this is the complete list, right? This is the complete list of the stocks which has hit the RS blue dot list in the last 90 days. So when you start off, you will need to look at this list because this list becomes your universal universe for dipping on the stocks to select. However, because I'm looking at it on a daily basis, what I will also do is pay attention to stocks which has come up in the last day or whichever the last day it is. I will select only those stocks and I go for here. And now I get 21 stocks, right, which are hitting 52-week high in the RS and by which it is getting the RS blue dot list. Now, this count is the number of instances the stock has hit a 52-week high RS 52-week high, and it has got a blue dot in the last 90 days. So I'm very interested in stocks which are having a count lower, right? Because I'm already filtering 80 plus. If you say 21 is too many stocks for me to check it out, you can increase the rating to 90 or 95 or 85. It's up to you. I keep it at 80 and then I keep fiddling out, removing stocks out of this and look at it. Now, if you get like this list and quickly go over this list, you will see that the stocks which had the most of the action on the day is appearing over here. And then if you want more fine tuning and more refinement, you can go and see what is the volume rate percentage change, what is the price percentage change, and you can apply some filters on it to select the best of the best stocks that have moved. I instead prefer to take these stocks to Excel, to TradingView, go through these stocks, and then take a call which one I want to look at and which one I don't want to look at. I actually had taken one trade in Illicon as part of the growth investing. I rode most of the stage 2 rally in it, and when it was showing signs of consolidation, I had exited. But now it's coming back again. I'm interested in it. DCB Bank, I'm interested now because it's coming up over here. I will take a look at it. Aman was talking about ACE Construction. That's showing up over here. So you can get a good feel of the broad spectrum of the stocks that are showing strength in it. Now, this is the first filter, right? This tells me which are the stocks which are making 52-week high on the RS. So this is one part of the equation. The second part of my equation is the trend template. So what I do is I go here, I go to this idea list, and MarketSmith gives me these two scanners, which are 5-month and 1-month trend template. Now, the difference is the 5-month trend template essentially shows you stocks which are fundamentally in a confirmed uptrend. Okay, so these are stocks where you are not going to see the stock making the first time breakout or a breakout of a stage 1 to stage 2. You will not find it. These are stocks which are already in stage 2. So there I exported, and the filter that I said is a basic filter with what I'm saying, master score A and B and relative strength above 80. That's it. I'm not doing anything else. So I filtered this.
Bhaskar, just go back to that previous screen of MSI.
Yeah.
I think there is a filter. No, in filter you can put that filter. No.
Yeah, I have put the filter. Here you can put it. Here I have put it. So the only filters I have applied in this is master score A and B, and price strength is 80 and above. That's all I've done. I have put this filter. So here I am not looking at the entire set of stocks which are meeting the 5-month trend template. Even here I am filtering. So in the PPT I had talked about master score A and B and RS above 80. That's the filter I apply over here. So now I get this list. I can scroll through it over here, but here I have to manually check for the RS blue dot list. If I want to filter only the stocks which are meeting RS blue dot, I can't do it here. So I take it over here, and here I have around 100 odd stocks, right? So now I will do a VLOOKUP, right? If you're familiar with Excel sheet, you can do a VLOOKUP between this sheet and this sheet, right? Between these two, I do a VLOOKUP, and that will tell me the stocks which are in RS blue dot list, which are appearing in this trend template. Now, before I do the VLOOKUP, what I also do is I pull out the 1-month trend template also, because that's also structure wise, that's also very similar to this 5-month trend template. And while I said that the 5-month trend template is essentially a confirmed uptrend, this 1 month is an indicator of a stock which is getting into a stage 2 uptrend. So I don't want to miss out on those stocks as well. So I take those 1-month trend template stocks, I add it to this list of the 5-month trend template, and then between these two Excel sheets, I do a simple VLOOKUP. And when I do the VLOOKUP, it will tell me, it will give me the filtered stocks of exactly the stocks which are RS blue dot list, part of the trend template, and RS blue dot above 50, above 80, right? So I had taken that and I have put it in my trend template. So those stocks go into my, it goes into my trading view. So now this is the list where I'm going to scroll through the stocks and I'm going to look for investing in the growth mode, right? So this becomes my final list of stocks. So every day evening, I just scroll through this list. I'll look for a stock where I can take an entry, and I will quickly take an entry and I'll go on with it. That is how I do my growth investing trading.
Bhaskar, sorry to interrupt. Sorry. So
No, yeah,
basically,
sure, no problem.
yeah. So we have three lists now, right? One is the blue dot, one is the 1 month template, and another one is 5 month template, right? How do you merge them, right? Just add all
No,
the stock
so
which are
I
appearing there.
merge. No, what I do is I take the 1 month and 5 month because the structure of the data is same. I combine the data into one sheet. It's very easy. You can just put all the data into one sheet. The 5 month and the 1 month, because I'm not differentiating between whether it is a 5 month trend template or 1 month trend template. For me, it is a compliant trend template stock. And then what I do is I do a VLOOKUP against the blue dot list. Okay, so this I do a VLOOKUP against this list. So then that tells me when I get a selection between these two, it tells me which are the stocks which is there in the trend template as well as in the blue dot list. So then I filter that. Does that answer your question?
Yeah. But that will be quite high numbers of the stock, right?
No, it won't. It won't. As of Friday, when I did it, so many number of stocks are there. I can actually send you this trading view list, right? Whatever I picked up on Friday, then you can start to go through this list, and then you can gradually build up that VLOOKUP thing is very manual, right? Like, no, I just quickly type the VLOOKUP syntax and copy paste, and it works.
So basically, you mean after putting the wheel list of blue dot, you are comparing the stocks which are there in the blue dot list are also reflecting in the trend template.
Correct. Correct. So let's assume, say, currently this is only 5 month file, right? Let's assume this is complete trend template, both 5 month and 1 month put together.
Okay.
I have the blue dot list here. So,
Okay.
and this is blue dot list I have filtered by A and B and RSS 80 because MarketSmith does not provide me to apply any filter on the site, right?
Okay.
So I select these stocks. I go to this, create a new sheet, and I apply it over here. So now
Okay.
my blue dot stocks have come into the same worksheet, right?
Okay.
So now I go here and I will delete it over here. And I delete the serial numbers. Sorry. Okay, now I select, I will sort on the column A, which is symbol. I sort the column, which is symbol. Okay, so now the trend template has lot more information, right? It has got what is the percentage of the low, percentage of the high, what is the volume, and all that. So I need this information for my stocks which are coming up on the blue dot. So I just go here and go to the end because it also shows me what base is forming up and all of that. Here I will say VLOOKUP, and what I'm trying to VLOOKUP is the first column. I select this, and where am I VLOOKUPing up? It's on the blue dot list, which is here. So I select this list, and I know the first column has the stock code, so I'm putting that, and I am saying false. So now this particular stock is not there. So now I'm going to fix the space that it's going to go. Is it M22? I hope it is M22. It's correct. I'm just showing anyway, right? So when I expand this, okay, now here are the stocks. Okay, I'm not sure if there is any. Okay, there are only 22 stocks over here. So if I look at this, I'm removing the not applicable. So many stocks are appearing in both, right? I'm just showing you how you can do it, the same thing, right? So this is only 5 month. I have not included the 1 month. When you include the 1 month, you will get a little more stocks. So for the 5 month, the trend template, I apply the VLOOKUP on the blue dot list. So now I get to know the stocks which are appearing in both. So when I filter this list, I can clearly see that which are the stocks which are in the 5-month trend template and which are also in the RS Blue Dot list. Now you add the 1-month trend template to this 5-month trend template, you will automatically get correspondingly a bigger number. And that is how I do it on a daily basis. So then you get to see the stocks which are showing up in this, coming up first time in this list. So then I pick up the stock, add it to my watch list, and start to play around it and work with it. Does that answer your question, Manteshji?
So what is your selection process after you filter out? Like how do you
Sorry, your voice is
select?
not clear.
What I'm saying is, once you have filtered your Excel stocks and you have put in trading view, how do you select the stock? What is the basis you are selecting? Because all are showing strength that are already in the templates. So, what give you the edge to select any of the stock? Or if you would have selected from your Friday list, which one it would be? If you can share some example.
So that's essentially a price volume action, right? That's essentially a price volume action. How you want to trade and what is your entry method, mechanism, and all that. As Manteshji was initially saying, right? Like now you can apply junior KG on this and see if you want to take a trade on the basis of it. Now, incidentally, I was in this chart, so I'm just talking about it, right? Like now, Apollo Microsystems came in this. And my logic for trade in this stock is one, it's coming and testing the 21 EMA. The blue is my 21 EMA. And more than the 21 EMA, I saw a RS divergence. Okay, I saw an RS divergence. So as soon as the stock put up a blue candle and it started to move higher, I took an entry over there. The blue line is my entry. My initial stop loss was somewhere over here. The blue line was my entry. But as the stock started to move higher, I quickly moved up the stop loss. So now I've protected my break even. So as the stock keeps moving up, I will move up my stop loss. So that's entirely a trade management decision. There is no other, nothing to do with market smith tool for you to decide how you want to select a trade and how you want to trade a trade. This essentially gives me a filtered universe of stock which is having a very strong RS and where the RS is hitting a new 52-week high when compared to the larger market. So I'm selecting the stocks which are showing a great momentum that I'm trying to take. And by the way, this is not a growth investing trade that I have taken in this stock. This is just a swing trade. So I'm a little bit flexible when it comes to swing trade, this thing. So I've taken a trade. Sometimes what I do is if I like a stock, but I'm not fully sold on the idea, I will take a swing trade, wait for a couple of swing trades to mature, and how the stock moves and how the trade moves, I may take it for a long-term investing. So I play it up on that basis entirely what I feel about the stock and how I feel about the stock. I can talk about KMU because this is this thing, right? So here I have put in the Fibonacci retracement, right? So it did not violate the 38.2 level. So I was thinking that if it's going to violate the 38.2 level, I may exit the stock. Okay, I'll rather remove the moving averages. It did not violate the 38.2. So when there was this big bullish engulfing candle that came over here, I said I'm going to wait for the day when the stock is going to break above this 23.6 level. It broke that level. I wanted to take an entry the next day. It ended up testing that level again. So I was a little bit jittery. And then the following day, it held at low. So I said, okay, if it's going to go below this, I'm going to exit that last lot I added. But thankfully, it didn't. Subsequently, it started to move higher. So I am now holding that lot also. I had entered somewhere over here. If you can see, I entered somewhere over here and I added somewhere over here, and I'm adding now one more lot over here. So that's the way how I do it, and that's entirely a trade management decision. It doesn't have anything to do with Blue Dot list or trend template or Mark Minervini's or Market Smith system. I hope I answer your question.
Yes, Bhaskar. Actually, I just wanted to know your version, like your conviction. So that was the only thing I wanted to know. Like because all the stocks which we filter out from this Excel and put it on TradingView are all a growth stock or showing a good uptrend, isn't it? So just want to
Sorry,
know.
come back once again. Come back
What
once again.
basically, I just wanted to know what is your conviction. Like you said, KNU and the other stocks. What conviction on what conviction you have selected this stock already?
So
The stocks which you
first thing is it has to meet the criteria. No, the first thing is it has to meet these criteria. It has to come up on the blue dot list and it has to be part of the trend template. And then I check out for the promoter holdings. I check out for the previous quarterly earnings, the usual canceling checks, right? I try to do those checks and I go and try to read up particularly for the investing where I'm going to take a very big positions, right? Where I'm going to go beyond 10 percentage. I read up their last investor presentation. I try to understand something about the company. And those are the input which gives me the conviction whether I want to trade this stock, whether I don't want to trade this stock or not. Samrat Pharma, it's a pharma company. I don't understand that business so well, but I still liked it because the chart was having a code 33 attribute. The canceling part of it, particularly the CA and C and the A was very strong. It had the code 33 attribute. So even though I did not understand much about their underlying business strength, I kind of like put a lot of weightage on the code 33 and I jumped in. So there is no one single template that I follow in terms of picking up these stocks. It's more of the flow that I have. I just go read about it, I come back and I take the trade. And it's not that it always works, right? I really liked the KPI Greens business. I really liked the way how they're coming up with the business. Their debt equity is very high. I am apprehensive of that part of it. But what caught my eye was the promoter is consistently buying that stock. The promoter, every time the stock falls, the promoter of KPI Green keeps buying that stock. So I was upbeat on that aspect of it. I entered the trade. But then the day when it hit my stop loss, I said, I'm out. I'm not going to fight with the market. I'm out. So I moved out with a loss in that stock, though I did not build up a lot of the position. So I enter with 2.5 percentage or 5 percentage, depending on my comfort, depending on all the my gut feel, right? Mostly it's my gut feel. 2.5% of my capital or 5% of my capital I enter, and accordingly I will have a tighter or a lenient stop loss. And as the trade matures, I keep adding more. From 5%, I go to 7.58 percentage. From there, I go to 10. From there, I go to 13, 14, and then I take it to 15. At the peak of its price, I had Samrat around 21% of my capital allocation. So now I have brought it down to around 10 percentage. So when it started to dip lower, right, I will show you. So I had entered somewhere over here. Okay. I think when it crossed one of these levels, I entered over here and I held it. So when it came back, I was sitting in a decent profit margin. So I wasn't really worried about it. So when it violated the 38.2, I have taken off 50% of my allocation. I'm only sitting with 50% allocation. So the day when it's going to go above this level, I may add that 50% once again, if I am having that capital available with me right now. So that's the way how I do the trade. And that's where I said, right, it's a very rookie way of doing it. It's not a very sophisticated way of doing it. But as of now, it's working and I'm also learning in the process because I started off with 1 or 2 trades last year. Till around June this year, I didn't take any trade because the market was in the downtrend. But now, because market is inching towards the 52-week high of Nifty, now I am gradually increasing my exposure as well. And that's the way how I do it.
And
Does
regarding
it make
this
sense?
BSE stocks, I think those you will be adding manually, I think. BSE names.
Yeah. That's a nuisance that you can't run away with. That's a nuisance you can't run. Because MarketSmith gives you the BSE codes. TradingView expects it in a different code. You have to enter it manually. But then the advantage is that because I'm doing it on a daily basis, Manteshi, I won't get many stocks. Right? When you're looking at it on a daily basis, and again, right, it's not like every day you're going to get a different set of blue dot list stocks. for a period of time, you will keep getting the same name. And that's another good way of us gauging the movement of the stock, right? If a stock that you have been seeing for a while suddenly drops off, it doesn't show up on the list for the next some days, right? That's a red signal. That's a red signal. You can see that, no, this stock is in my watch list, but it's not showing up in the blue dot list. Now, out of nowhere, suddenly you see one stock coming up on the blue dot list. Now that creates that curiosity. You can go and start looking at that stock. So that's the best part, which I like. I'm able to pick up a stock when it comes out of nowhere, and I'm able to eliminate a stock which was in my watch list, but it's fallen off the cliff. I can quietly pull it out of my watch list. So I prune my watch list also in that way.
Okay, one more thing,
Bhaskar, one
Bhaskar.
suggestion actually on this mapping, TradingView and MSI, BSE.
Yes, sir. Yes, sir.
So can you just share that list so that if anybody finds that, they can map? That will help you also.
These two, right? You're talking about these two sheets.
No. That mapping BSE code, TradingView versus
That I do
MSI.
manually. That I do manually.
So you are not maintaining that list somewhere in the Excel
No,
or somewhere?
see, for example, right? If I select it for Friday, I have only these two stocks that I have to enter. And Dr. Agarwal's I is already there in my list. Okay, so I don't have to really do anything about it, right? It's already there in that list. So I'm not even going to add. If a new stock comes, I'll just go type the name of the stock and get the code, and I will add it to the watch list.
Okay. I thought you are maintaining separate Excel sheet where you are on
You
one column.
can do that.
TradingView
You can do that. But for which, if you are going to be getting around, say, like 70, 80 stocks to add in a day, then you need to do it. But if you are not going to do that, then there is no point in it. See, the problem in maintaining separate sheet is that will become one more VLOOKUP. You will have to add one more stock and you have to pull it. And if this name is new, is not in that list, then it's of no use, right?
Right. Yeah, thanks.
Bhaskar to continue with the question. For example, you might have made a list, done the filter on Friday. And is there, after filtering, is there any stock which you are going to pick up on Monday, or you think for momentum or swing? Do you think anyone is falling under that, your criteria or your conviction?
I'm not getting your question.
What I'm trying to say is, after you might have filtered your list on Friday, end of the day, isn't it? That Market Smith and Trend Fit, and you would have posted in TradingView. So, is there any stock which you are going to take a trade on Monday for momentum or swing? I just wanted to understand how you're doing it. Like, I got your but other things, like how you're putting it together.
So, no, there is no such thing. I keep scrolling through the list. If there are charts, I mean, this is not as of Friday, right? I keep adding chart whenever I get something coming up in it. So here I will look at the weekly chart. This is one forming a nice base, right? I'm keeping it in the watch list. On Monday, I'll keep scrolling up and down this list and up and down this list. If I see any stock hitting the maximum gains, I will take the look at that stock. So that's how I'm doing it. It's not anything very organized that I will do. I was having Andhra paper. I think somebody was talking about it, right? I was having Andhra paper. It almost hit the thing. I thought it's going to give a breakout. The result came, so I didn't take a trade. Aman was talking about it, right? When a stock is going to give the result, better to be on the sidelines. So I didn't take a trade. And the result was good. On the day of the result, it put up a big red bar. And I said, I'm not going to enter. The next day, it put up a big green bar, but it didn't cross the resistance. So I said, let it break the resistance, then I will worry about it. It didn't do it. So now I'm not taking the trade. I will just keep monitoring this stock. Krishana, Salil and I have been talking about this stock for a long time. We have been tracking this stock. It's got a good structure. It has gone up. It has got a good structure, but look at it on a daily basis, right? Like, no, it's making a VCP, but I'm not going to enter into this stock until it's going to cross over this level. So I'm not planning anything specifically on any particular stock as of now. If I get some interesting trade, I will take the trade. But I keep scanning this on the daily basis just to see what stock is doing what and how they are moving. And then I plan my trades.
Okay. Thank you so much.
So, Bhaskar, one question on MSI actually. So there
Yes,
is one
sir.
high potential high tide flag something.
Correct.
So have you ever used that, and how was the?
Okay. So as an idea, I really like. I'm a big fan of high tide flag, right?
Yeah.
As a can slim entry pattern, I like it. The problem with marketsman's data of potential high tide flag is, as the name suggests, it is potential. It's
Right.
not that these stocks are having a high tide flag pattern forming up. So you look at a stock like this, right?
Yeah, because what I read, they are saying it's very rare, but the success rate is very high.
So
Yeah.
few pointers. So the best thing is to trade this pattern. You should read through and you should watch a lot of YouTube videos on how people trade high tide flag patterns, right? And if a stock is not part of the trend template, but it is part of the high tide flag, I still don't touch it. I want a stock to establish a trend template, because in this stock, right, when it is giving a move, how do I know this momentum is going to continue, right? Like, no, there is nothing on the earnings. The master score is C. So you can apply the filters and you can restrict it. But currently, I'm doing it only between RS Blue Dot list and trend template. The thing with the high tech flag is, it's always better if you do it with your 1 month trend template and RS Blue Dot list. If you look at that combination, a high tide flag stock should ideally come up in that. The only thing is, it has to meet your other criteria such as the master score and price strength and all that. If it comes, you should still be able to take a trade. But generally, they say, whichever the video I have seen, people who talk about trading high tide flag, they've always said that you have to do it in a stock which is coming out of a stage 1 base. Later stage 2 high tide flag, you never know if it is a high tide flag or if it's a topping pattern. So you can't take that risk. So it's just not only you have to be selective because it's a rare pattern, it's also rare because you have to do it in the early part of a bull run when a stock is coming out of a early stage to rally. If you have found this in the later part of last year when the bull market was already at the verge of ending, and that time if it's a stock coming out of a stage 1 into a stage 2, it's not worth taking those trades because those are laggards, right? Those are not the market leaders. So you are not taking care of the L of the canceling. So I generally don't. I've stopped looking at this list, saying, "Arey, there are too many lists in this. I don't want to keep looking at all of it." So I simply look at this. Now, other thing, like the other question is, what do I do during the day, right? I come here and, okay, now this list I'm interested to look at. Because if I see a stock in this list, which is in this list, either of these lists, right? Then I quickly take notice of it and I try to trade. But I'm generally interested in stocks which are more than 100% volume percentage change, and stocks which are in this list which are appearing in my watch list also. So that's the other thing which I do on a regular basis. So I keep I keep looking at this list to get a feel of which stock is showing momentum. But one thing I've noticed is the
This is for
price
the day, right, Bhaskar?
Sorry?
So this is for the day, right? So it's already moved, right?
Yeah, this is for the day. This is for the day. During the day, I keep looking at it. One thing to note is this is delayed by 15 minutes. So by the time a stock has moved much higher, you will still see a smaller amount over here. This is delayed, 15 minutes delayed. But you still get some idea end of the day, right? Which are the stock which has moved up substantially with volume greater than 100% change. Right. So it gives you some feeler. And the same stock, if it comes on your blue dot list for that day, and if it meets your trend template, you automatically get an extra tick mark, right? It's an extra edge for you. Right.
Bhaskar, can you please open up one chart? I have only a single question related to MSI, not with your strategy.
Okay.
Actually, I saw a few lines like black and orange. I just wanted to know that are they 50 EMA, something like that?
Yes.
What are those?
So these are the moving averages. I have set it up. So you can go here, go to the settings, and you can set up the moving average both for daily and weekly, whatever the averages you want to set. So I have set 10 weekly moving average SMA as a red line, and the black line is 40 weekly moving average. So I will, when I'm looking at the weekly chart, I will look at it. Honestly speaking, I don't pay attention to the moving averages in markets method. You can actually turn off the moving averages, because I'm anyway going to take this chart into my trading view and look at it where I always have my moving averages. So this is the tools you can set up whatever the moving averages you want to see. You can set up the other things. I have activated the pattern recognition. So whenever there is a pattern forming up, I will know, because currently it's in a consolidation pattern. It's consolidating for the last 7 weeks with a depth of 17.31%. It's in stage 1B. Good, right? This is a stock which I would like to take. So when I see a chart here, and if I like to take a trade, right? Now let's say, for example, this RK Forge, it's forming up a nice pattern on the weekly basis. I would like to take a trade. I come here and I check RK Forge. Right, it's coming on a nice pattern. And what is the stage? This is stage 2, cup and handle. Okay, so now where is the buy pivot? It's almost at the buy pivot, and it has got all the things, right? It's a blue dot and it is trend template. So I'm fine, right? If it gives a breakout, then I'm going to be taking a trade on this stock. So this is one of the ways in which the red flag, I will pay very less attention to it, because most of the time in these stocks will be low liquidity. I'm okay with it. If the red flag is high promoter pledging or high debt company or additional surveillance, otherwise I don't care. Now, one good that you brought up this red flag. Mentally, I maintain some red flags, right? There are certain groups which I don't want to trade. For example, if you have been following up even if you have not followed up the social media, there was this stock, Rayalaseema something, right?
Yeah. Rayalaseema something, yeah.
SRH Hypo. Sri Rayalaseema Hypo.
SRH.
Hypo.
There you go. So this stock, it had a dream run, right? It had a dream run. Actually, it's not probably showing up over here, but the stock had a fantastic move. They had another group company called SRAC, TGV SRAC.
Right.
This was coming up in the thing. Look at this move, right? This was coming up in this. Both of these stocks are of the same group. Okay. Now, this meets all of this. This was meeting all of the criteria that I have, right? When it was in the uptrend move, it was in the blue dot list. It was coming up in the trend template also, if I'm not wrong. Consistently, it was doing really well. So ideally, I should have taken a trade on this. But I have, in the past, I have read some negative comment on this management. So this management, and by the way, in all of this, I don't trade Adani Group stocks. It's my personal preference, right? I don't trade Adani Group stocks. Make Money, Fine Chem was doing really well, but I was not getting into it because there are historical negative coverage on the management credibility. So when I'm putting 10% of my capital or 15% of my capital, it's always like the management is guilty until proven innocent. I don't put my money on any and every management. I try to read up. If I get any negative red flags, I stay away from that group. Because there was a red flag news on TGV SRAC, and because I figured out TGV SRAC and Sri Rayalaseema are same group, I didn't take any of the trades in both of these stocks. So that's the red flag which I'm more interested in about. I don't really worry too much about the other red flags that comes up, because low liquidity will always be there here. Most of these stocks, low liquidity will be there. If the volume that I'm going to trade is much lesser compared to the average volume that the stock trades, I have nothing to worry about. I'm not going to consume more than 50% of the daily average volume for the stock. I will not do that. I hope I answered the question.
Yeah, Bhaskar, one question on this screen. Can you just scroll a little bit up on this EPS strength and all those things it is showing, right? Yeah. So out of all these four, which one you prefer? Obviously, you said
Master score is the biggest, and then the
okay.
price strength. I ignore the group rank. Now, some of my friends from the bullish trading group frown upon me for doing it. They have a strategy which is going on group rank, but I find it too dynamic figure for me to plan to hold a trade for few months because it may keep changing. So I rather give weightage for the price strength and group rank. And you may ask me, why am I not looking at EPS strength? Because EPS strength for me is a historic data, right? The last quarter number is what is going to get baked into the EPS strength, and it will remain at least for the next quarter. So I don't pay much of attention over there. I rather look for this one. And the way how I look at the chart in MarketSmith is not like this. I straight away pop out the chart. And when I
Okay.
come here, right, I look at the quarterly earnings. And this is a classic code 33 stock, right? The December quarter had a EPS of 3.86, which is 320% growth corresponding to the previous year for the same quarter. The sales was growing 64%. In March, the EPS grew by 2,805%. I mean, it's not no longer it is a code 33, but the previous quarter it was code 33. The growth rate from September to December is 320 from 34, and from 320 it is 2805. So it's growing, and the rate of growth is also higher. Likewise, the sales also grew. And then come June, it has kind of like tapered down. And because I didn't take the trade, I didn't really bother about it. Return on equity, management holdings, what is the master score, and what is the annual earnings, what is the market capitalization, though I don't pay much of attention to it. I would rather look at the float, what is the volume traded, and how off it is from the 52-week high, and I am through with the stock. I will decide to take the trade on this basis. So this is the window that I keep seeing it. So most of the time when you see me sharing MarketSmith screen, I share this screen. I don't share the other screen. And invariably, if I decide to take it for growth momentum investing, I will go to the site and I will check out. And funnily though, a lot of the stocks which meet all of this criteria will have a very pathetic website. I have had instances where when you try to open the website, I will get an alert in Chrome saying that this site is insecure site. If the company cannot maintain a secured website, I don't want to put my money into the company. So the company straight away goes off my watch list. So those are the ways in which I filter the stocks.
Okay. So basically, just to summarize, fundamental analysis to some extent you are doing through MSI only, right?
Yeah, I do only with MSI because there was once a period of time when I was bringing some data from screener, right? For example, in this screen, MarketSmith does not tell me what is the pledge percentage, right? So I have to go to the screener to see the pledge percentage. And then I was like shocked to see there were stocks which had a very high pledge percentage, but the red flag was not showing up on MarketSmith. So I said, like, this is crazy, right? Like, no, this is like a television channel which is pro of government and a television channel which is anti-government giving you the election result. I am from Tamil Nadu, right? Like, no, so every time when there is a election, state election coming up, when the election result is getting announced, if you're going to watch Sun TV versus a Jaya TV, you will have absolute comical scenario.
Yeah.
If the ruling party is winning, that channel will boast it a lot, and the other channel will trash them like anything. So you will be terribly confused if you're going to keep watching both of them. You should watch only for entertainment. So now I stick on to MarketSmith. I have paid money for them. I will use them, and I will go only on the basis of this.
Correct.
Bhaskar sir, just one question. Sorry, maybe you already mentioned this. In the Minervini template, before you filter and export to Excel, how do you filter group score A and B and master score A and B and price strength or EPS strength?
Price strength. Price strength is 80 and above.
Okay.
So I have kept a very simple Sorry, I know it's getting late for some of the people, but I'll just quickly show that.
No, it's very useful.
I've got
Actually, no
something a
problem.
basic filter. I got it as a base filter. I have no filters anywhere else other than MarketSmith rating, and the rating is only these three. That's it. No other filters.
So,
I
Bhaskar,
prefer
one
to
related
take the
question.
stock.
Yeah, sorry, please continue. Yeah.
No, what I meant to say was rather than putting too many filters and get very little stocks and then break my head, what do I do? I rather put the bare minimum filters I need, get the stocks, put it into the trading view. If I like a stock, come and verify it here, and then I take a call whether I want to keep it or not.
So in this only, actually, I have a related question. So you are looking actually RS rating for last 1 year, right? So why not 6 months or something like that?
You can do that. You can do that. You can always do that. See, the
Did
thing
you try
is
and how was that result?
So, very good question, right? I don't want to put that filter in MarketSmith and do it. I would rather do that filter and play around with it in my Excel sheet, right? Here,
Excel, how
when
you
I'm,
will get 6 month this one? So it's already
yeah,
available?
you have that. When you export the data from MarketSmith, right? Okay, let me remove the filters. So when you look at that, and this is why I put the VLOOKUP on the trend template against the blue dot instead of doing it on the blue dot, because here I get the data, right? You have these two columns,
Oh, okay,
RS 3 month
okay.
and RS 6 month. So in Excel, if I say I want to look at stocks which are only making greater than 80 in RS 6 month, I put this filter here. So this tells me only the stocks which are meeting that criteria. Or 3 months, I can do it over here. Now the problem is when you do it over here, the more filters you apply, the lesser the number of stocks you're going to get. So
No, I was not aware of this actually. Yeah, thanks for bringing this.
So what you do is when you come to this, right? Let's say that you put in all the filters and you apply it here. Before you extract the data, you have this edit columns. You go here, say select, close it. Sorry, you should say save. Okay, select, save, and then you extract it. Now you will get all of those data coming into that Excel sheet. So there you can apply that filter and you can do that.
Okay, fine.
So I hope you guys found it useful. If any of you have any questions, I'm part of both the groups. You can ping me on Telegram, or you can ping me on WhatsApp or in Twitter. I can clarify if anybody have any questions or any doubts. We'll be glad to help you guys. If any one of you have got other better ideas or improvisations to this, we can always explore. I need to spend a little bit more time in figuring out or trying out Manteshji's junior KG strategy on these lists. I haven't done it. If any of you who are regularly using it can try it out and tell me how to do that, I'll be more than happy to do it. Sorry, somebody had some question. Okay, I thought somebody had some question. Okay. If there are no other questions, Manteshji, back to you. Thank you so much for your time and patience, and grateful to you for inviting
So
me.
just one out of this question. So suppose there are a lot of people who are working also, right? I believe, I don't know about you, Bhaskar. So you are full time or you're part time?
I'm full-time trader, yes.
So any suggestion for the part time, means who are like Manteshji also working, right? So how? So it's a good idea actually if we filter this on weekly basis and then
Yeah,
try,
you
or
can.
is there any
You
other way?
can, right? You can. See, the charts I do it on, I see the weekly charts only. I don't see the daily charts. You use GTT orders, you put in your stop losses, you just take care of your risk management and you can do it. In fact, one of my friend who convinced me that I have to subscribe to MarketSmith if I am using Cans method. She is a working professional. She is a person who is part of the defense, and she works in the night shifts also. And she gave me this idea that no, she is able to do it as a part-time person working with defense, and why can't I? So I took the subscription, and now I'm doing it. So I keep sharing with her whatever the stocks that I come across. She will give me her feedback. She will share with me the names that she is doing it. So you can very well do that. See, think of a stock like Gensol or KMU, right? Like it will give you plenty of opportunities to enter, depending on whatever is your entry strategy, right? So even if you don't catch the entire stage 2 rally, you can still be able to catch a part of it. And you use the weekly chart and you can trade as per your risk management strategies over there. You can very well do that.
Right. Thanks, Bhaskar.
One question, Bhaskar.
Yes, sir. Please
Uh,
go ahead.
in all the three lists, RS, Blue Dot, and 1 month and 3 month, you are using this filter A, B, and RS80. The price strength
Yes.
above 80, is it?
Correct. Correct.
Okay. Okay. Thank you.
Otherwise, the consistency will be lost. See, frankly speaking, I don't have to do. I can just pull out all the blue dot list file and put it over there, because anyway, my trend template is filtered by A and B and 80 plus, right? So whichever the stocks which are in that list, if it appears in the blue dot, it's going to come. So blue dot, you may not have to apply those filters. But when I'm looking at the blue dot file, I want to get a feel of which are the stocks that are making to the blue dot list on that day. So for that, I put the filter on the Excel sheet and check out only those names. But the names will not change on a daily basis. It will change very rarely. So if you are going to have this as a daily evening ritual, trust me, just checking out on the blue dot list file should not take you more than 15-20 minutes. You put in these filters, take the names, you go to MarketSmith, check the charts. If you see a new stock, add it to your watch list. Whenever you have some time, read through it, and then you can straight away start doing it. The some time it will take you some time, because you need to figure out how to do the VLOOKUP and all that. But once you get it into the routine, this will be a very smooth sailing exercise. Over to you, Mantesh ji.
Thanks a lot, Bhaskar, actually, for sharing your process in such a detail, actually. Really
No problem,
grateful
sir.
for that. Just one thing, actually, I
I'm
want to know.
grateful for all of your time. All of you are taking time, so I'm grateful for that. Thank
You
you.
have actually given such a detailed presentation with everything actually covered. Just
Thank you,
one
sir.
thing I want to know, whether you apply any filter on counts of blue dots or something?
No, if it comes on a day basis, I prioritize stocks with a lower count of the blue dot list. I don't really filter it out. You want to restrict the number of stocks coming up, you can restrict it with a count of, say, less than 10 or less than 15 or something like that.
So any number
If
in counts you actually consider?
earlier I used to be very finicky and not look at stocks which are more than 10 count. But you can choose to do that, 10 or 15 count, because what it means is in the last 90 days, the stock has appeared more than 10 times in the RS Blue Dot list, which means the stock is consistently hitting 52-week high, which more importantly, which means the stock is little away from where you could have bought it. So between a stock which has got a higher count and a stock which has got a lower count, I prefer a lower count stock.
Yes, yes. So fresh uptrend, actually, we can make
Exactly.
sure.
You can catch it. Yeah, right.
Okay. Okay.
Right.
Thank you. Thanks a lot again. Huh? Thank you.
My
Thank
pleasure.
you, Bhaskar and Maltesh ji.
Thank you, sir.
Yeah, I think we are done with the questions. And any more questions come to your mind, guys? Just drop a message in our group.
Yeah.
And I'm sure whenever possible, Bhaskar will reply and clarify those queries. And once again, thank you very much, Bhaskar, for your time and the
Pleasure,
detailed presentation.
Pleasure. Thank you so
Yeah,
much.
and I think once the session is complete and once the video is downloaded, I will put it on the YouTube and I will share the link. So if anyone has missed or want to see something, they can always watch it the recordings.
Yes. Thank you. Thank you very much.
Thank you very much, guys. Thank you.
Thank
Thank you,
you.
friends. Bye.
Thanks.
Take
Bye.
care.